Yeah, so I think if we look back at the past half year, we are happy with how volumes developed. We continue to see growth in share of wallet with our customers. Most of our growth comes from existing customers, and at the same time, we were in a position to win new customers, for instance, like Instacart and Lacoste. Of course, with the current macroeconomic situation, things change quickly. I think we are in a lucky position that we have a really well-diversified portfolio of customers. So we continue to focus on making sure that we continue to grow with them and increase share of wallet. So it's very hard for me to predict like what the impact will be on the 23 volumes, but it's one of the reasons why we reiterated our guidance also on revenues, because we strongly believe that we will continue to grow even with these headwinds.
Ingo, the growth hasn't been a problem for many years, and this has been one of the hottest growing areas of financial services. But I wonder whether the industry and your company specifically are just growing too fast, and now there's this catch up on the amount of spending to get the systems in place, that it's a stable business.
Yeah, I look at it slightly differently. I think we are in a position that we actually could hold up very well. So we've grown revenues quickly, but we're now in a new era of investment. So we're getting to that next level of growth in the company. We're investing for the future, not just in new products like embedded financial products, but also in our existing core, so digital and unified commerce. And if we would stop hiring right now, the company would continue to run without any problems, and we would very quickly get to our long-term guidance on EBITDA, which is over 65%. So I think this is more of an investment era for the next 5 to 10 years even, than that we see any issues on the short term that we need to hire, because otherwise the business would collapse.
Yeah, the problem is, I mean, it says Adyen is in investment mode, you've said today, but don't you think the market wants to see you in profitability mode? And as much as EBITDA is an interesting level to measure companies on, it's not real profit, is it? It's profit before a lot of other things as well. And my worry is that your valuation at 61 times forward as well is just not realistic, given the fact that you're not making real money.
Well, I think we're making real money because we're also making net profits. We are cash flow positive. So the EBITDA is not just a construct where we're trying to show that we have some operating leverage. No, we are a profitable company. We've been so for the past 10 years. So I think we are in a position that we can make these decisions in a conscious way. And I think that's how eventually you should build a business, like investing in times when you see the opportunity, and then build from there. So I'm not worried. Net profits are stable, and we are in a very good position.